Okay, good morning, folks. Good morning, good morning, good morning from wherever you are in the world. I'm here back in the UK. Spent my weekend on a plane coming back. So hopefully, hi there, folks. So hopefully you can hear me now. I'm back in the UK. Having had a lovely week in Thailand. This time last week, I broadcasted you from Thailand. First of all, let me apologise for the slight delay today. We're coming on 12 minutes past the hour due to some technical issues. Which hopefully now have been resolved. Thanks for standing by, waiting for the live stream. Thanks again to Eightcap for having me on in week 4 of my guest analyst appearance here on the channel. So delighted to be here as well. Gosh, it has flown by. It's going to almost be June. I'm not sure who's up next on the Eightcap channel, but certainly been great fun doing this for you. And of course, if you were following us last week, you would have seen the big trade that we were deciding to put on, which is in that big reversal that we saw in the pound against the US dollar. Did that from Thailand, made a few pips on that. Almost paid for my holiday, actually, but that one was good to put to you last week. If you remember what it was basically this little setup we saw in the pound against the dollar. This is one of the strategies that I teach inside our trading room at Forex Signals. It's basically like a reversal trading strategy, and we saw a big level come in to support on the daily chart. It's a daily reversal, so it's looking for the big moves. And this indicator that I spoke about last week from the beach, as it were, gave us an indication that this was a move that we were going to see pushing higher. And of you that have been following the currency markets over the last week would have seen the big pullback you've seen in the US dollar, and that was an absolute great signal. So far, if you're on that trade from last Monday from the beach, you're up about 290 pips. So I'm pleased to have been able to deliver that one to you from there. So last week, busy old week for the US dollar. For those of you that have been following me for the last 3 weeks or so, you would have noticed that I keep pulling up this little chart here. Now, this is what I call the momentum meter. Now, unfortunately, it doesn't predict the future, but it does tell me exactly where the currencies are at this moment in time. Quite frankly, I don't know how anyone can trade the currency markets without using something like this. It basically shows us where the money is flowing. And as a trend follower, most of my intraday strategies are trend following. So I like to get into a trend. As a trend follower, I like to buy the strong and sell the weak currencies. And that's basically what's happening at the moment. You see this green line. In fact, if I'm going to move this out to the daily chart, okay, so this is now the daily, and you'll see this green line. This is the US dollar. Okay, so you'll see that the US dollar has been in decline. So what we have to do now is look at the currencies that have been best performing against the falling US dollar. And as a trend follower, had you been following this all last week, you would have been selling the dollar. This is telling you, with the angles here at almost 45 degrees, that the bias is in that. It's very rare for this sort of big move you see reverse just on a dime. So this is where the money was flowing out of the US dollar, and money was flowing into the British pound. British pound was getting very strong. That's the white line here. The white line shows pound dollar was the trade, and that's what you saw on that counter trend reversal pattern that I showed you a moment ago. So the other reason, of course, why the dollar has been so weak, well, if you are following the fundamentals, you will be aware of what I always talk about, certainly in terms of global bond yields. Look what's been happening to the yield. In fact, if I go, I see what I'm just going to show you here the 10-year yield. Okay, this is the US 10-year yield. It's been in decline as well. Now, typically, currencies follow where the yields go. Stands to reason. The yield, the bond markets, is one of the major capital markets in the world, accounts for, I think it's the second largest market in the world after the stocks. Well, of course, you've got the currencies. And obviously all the pension pots and the 401 accounts, they all have a significant holding in bond yields. And the dollar has been really enjoying a run up over the recent months as the bond yields merged and emerged on the 3 level. But what's happening now is that the 10-year yield is dripping lower. Okay, again, look at this pattern at the top here. You'll see, you might notice this with the that we spoke about on the pound there a moment ago. Yeah, that is a bearish pattern at this level at 3%. That bearish pattern on the daily gives an indication that yields were going to fall, and indeed they did fall. And because the yields have fallen, US dollar has dribbled lower as well. So the dollar has gone lower on the back of what's been happening in the bond markets. And this is the DXY, which is the dollar index. So it's basically the dollar pitched against the other 6 major currencies. You'll see the same type of thing. It's almost a mirror picture. The index against the 10-year, you'll see it's almost exactly the same. So this is why the bond markets basically lead often where the currency markets are going. But interestingly enough here, if you look at the other currencies that have got an interest, look at the 10-year yield, which is the this one here, sort of where my crosshair is. It's drifting lower. But what's happening over here, this purple line, that's the German bond. That's basically the Euro bond being pushing higher. Euro bonds now moving up to 1%. So consequently, the euro against the US dollar has been surging higher. And I think this is maybe a play for this week that we will be looking at. Now, there's no central bank. Well, in fact, we've got New Zealand central bank later on in the week. But there's now talk. ECB are hinting, that's the European Central Bank, that we're going to see a move higher for the in the euro interest rates. And as all the analysts start to talk about that now, that's obviously putting some strength into the euro against the US dollar. You can see that here on the chart. So this is basically my bias now, euro against the US dollar. I've got a level of resistance that we're coming into now. We're literally on it now as I speak. Okay, this is the level where we had this pullback, of 150 pips from the low of 104 sort of 50 up to 106. It stalled and pushed on lower. This level will be looked at now as we are starting here on a Monday morning in the Western Hemisphere. Of course, as all the traders get to the European desks, obviously out there in the Asia Pacific, less traders, but now the Europeans are emerging on their desks. The US will be coming in later, most actively traded currency pair. If we can push through here today, this level of 106.20 or 106.25 zone, if you can break through this level of resistance, often resistance, if broken, acts as support. So we may see a move. Let me just pull over my little drawing tool here, and then I can highlight it slightly easier for you. So if we break through this level here, I would imagine that this level on the way down is going to act as support. I don't know up here at the moment if there's going to be huge selling. I don't know that. None of us know that. We have to let the market show its hand. So I'm going to wait to see what breaks, what's basically up here when the big players get in. If it pushes us back through, well, okay, we'll reverse back all the way back down. However, if we hold above this level for the first few hours of trading, I don't see any reason. I should say the bias will be for a continuation of that dollar weakness, euro strength into the next level of resistance up there at 108.50. So I'm looking at that as a potential bias today. So wait for the breakout, wait for the retest, buy on the retest, price action, stops below, trend continuation high. Could be the trade for the week. So we'll be keeping an eye on that one. Remember, I'm looking at the momentum meter as well. The dollar is still in decline. Doesn't predict the future, but I want to go with where the main money is flowing at the moment. So that's basically the euro against the dollar. And of course, the pound against the dollar is also pushing higher. So that is well worth looking at. As I said to you a few times now in the last few weeks, there's a couple of strategies that I trade. One, of course, is the reversal strategy. Another one I like to use is and it's going to stall here for some reason. MetaTrader is not responding. Where did that get on there? It is not responding for some reason. Let's have a look here if I can tell me pull up. That is not the one I wanted. Let me just see if I can. There we go. Where are we going? My screen is stalling there. I might have to revert back to. There we go. So one of the other strategies I like to use in my intraday trading is basically following trends. Okay, and I never know when I'm following a trend. when it's reversing, whether it's going to be a reversal or is it a pullback. I never like to buy the tops of trends. I never like to sell the bottoms of trends. Yeah, I like to get in on the pullback. So basically, what I'm trying to say here is, if you're following a trend and say the trend is edging up like this, and you have the pullback, every market behaves like this. Yeah, we don't know when this is happening. Yeah, whether this is going to be a pullback or whether it's going to be a reversal. So I use price action. This pullback here, that typically would be a red candle. If indeed that then gets engulfed by a bullish candle, that is a clue. It's only a clue. Got the higher time frame trend for the main bias. If you see a bullish engulfer like that with the trend, that is an indication that indeed was just a pullback and not a reversal. So my strategy is basically to buy this pullback with stops below and profit targets above. Also, with a pattern like this, you may have seen these candlesticks before. This is like known as I call them pin bars. You may have seen them referred to other names, but I call these pin bars. It shows you here that the main sellers were in control, taking us down to this low. But in that particular time period, buyers pushed the market back up again. The color of this bullish pin bar really doesn't matter. It just does show you that the buyers regain control. If you see that in an uptrend, it's a good indication that this pullback was indeed just a pullback and that the trend continuation is in play. So I like to use this pattern finder, and for the sake of this short stream today, we'll see indeed if there are any setups. So I'll show you exactly what I'm looking at. I'm just going to turn this on now. I'll look at the bullish engulfers and the bullish pin bars, and I'll get them to analyze on the 5 and potentially the 15 minute. Now you can do this on all these different time frames. You can do this manually. There are, of course, this is available inside our trading room at Forex Signals. But of course, you can. There are, I think, 3 indicators like this on TradingView and the like. But of course, if you wanted to try and access this, you can do so by heading over to forexsignals.com, taking out the free trial, and you play with it yourself. So I'm just going to activate the scan. It's going to basically look for these potential setups. So I don't have to be pinned to my screen looking at all my 28 different currency pairs. This is just doing the work for me. When I see some price action, it's going to give me a heads up that this has got a 15-minute pin bar. Just click on view and it will show me exactly what's going on. So you can see here, this is no trade. Okay, so I'm not going to take this trade. Let me just turn those speakers down. So this is clearly is an uptrend at the moment, but the reason why it was flagged up is because you have this bearish pin. Well, that doesn't work. I want to get a bullish pin in an uptrend, not a bearish pin. So I'm not going to take that trade. I will take some trades today if I can, just on this short stream, but we're not going to be taking that one there. So I'm going to close that down, go back to the panel and see if there's any other setups. We've got a New Zealand dollar. Let's have a look at this CAD Swiss engulfer. Or was that? So CAD Swiss, this is a bearish pattern you saw here. Okay, indicated that you had this sort of move lower. But look at the trend here, guys. This is a flat trend. You're not going to be taking a trend continuation trade on the back of that. It's a trending market. I beg your pardon. It's a consolidating market at the moment. Remember, I want the high probability trades. I want to look at the bigger picture, the trend. So typically on a 50, if I'm looking at the 5 minute, I want to be looking at the 15-minute chart to see indeed if the trend is up. But I can tell it's not going to be up. So I won't be taking that trade there either. Just click that one off because I have seen it. I'm just going to give you, hopefully we'll find something. I mean, this is a 15-minute pin bar on the, again, not one there. Again, this is, we've had the pullback. Well, it's not a trade setup, isn't it? It tells you the direction, of course, with the color, but not one there that we're going to take. What about, so we're not taking that one. We've got, what time is it now? We've got 4 minutes before the next one at the bottom of the hour. New Zealand, I don't think that's going to show anything either. New Zealand against the dollar. Again, no bearish pin at the top. Now, I have done some videos on this strategy, which you can check out on the YouTube channel, ForexSignals.com. I think we've got 350,000 followers there or something like that. One of these strategies, is a strategy video talking about this strategy that we teach and trade. So have a look at that. Nothing there as well. Shame. Well, Monday morning, historically for me, is not one of the best days to trade. Markets are, the traders are getting to their desks, and maybe, I don't know. Monday mornings is a funny old time to trade, isn't it? Because the markets are really, um, trying to find their way, or before they actually kick in. So I always say to our traders inside the room that maybe don't be forced into a trade on a Monday morning. Wait to see if the market is showing its hand. Hey, you've got Euro CAD pushing higher, breaking out of this consolidation range. There's potentially a trade high on that. What's the 15 and 30 minute on that? Not really comfortable with that one. So it doesn't look like they're going to get any trades away this week, this morning. Let's have a look here. Euro yen 15 minute. Is that going to show us anything? No, all very consolidating at the moment. You can trade this strategy literally on all different time frames. Okay, so there's no trends happening in all time frames, so you don't need to be sticking to the lower time frames. In fact, these days I trade less on the lower time frame charts than I do on the higher time frame charts, purely because of other responsibilities. I just clear these off now as nothing is coming up. I'll wait for the next counter to come at 2 minutes time to see if anything comes up, and we'll just leave that there for now. I'll turn those speakers on so it'll buzz me if something does pop up. Typically the way I start my trading week though would be, and I suggest people do this maybe on a weekend or on a Sunday, is to plot out key levels of support and resistance on the higher time frame charts. If you're struggling with your trading and you're sort of struggling with your win to loss ratio, and you have a few winners and have a few losers and what have you, I've got a little trick for you basically. Don't trade your trades through a major level on the daily chart. Just stop those trades, and I think you'll find that your win-loss ratio will improve significantly. So I normally do this on a Sunday. I was in the air on Sunday. I literally got back late last night from Asia, so I haven't had a chance to do this. But typically I would do this on a Sunday. So I'd go to my charts, pick up the currency pair that you may be going to be trading for that week. I might pick up, say, like the Euro Swiss. You see, this is work I've done before on this currency pair. Let's pick up one I haven't done before. So this is the pound against the Oz. I don't actively trade pound Oz. This is the daily chart. If you want to plot your support and resistance, head over to... Okay, we've got a few trades going off there, which I'll come back to in a second. Head over to the line chart. Just plot the key levels, the big Vs, the big As, anything that's respected a couple of times. This is really going to improve your trading. Look at that level there. It was the support here. It was the resistance here. Remember, old support becomes resistance. You've heard me say that a few times now. You've got to look at this one here, another classic one. Okay, classic one down there. Okay, you've got a double V there. You've got a A there. That is a level. Okay, so this at 107, 175.40. If you're having a short trade here, don't trade it against that level. Just sit on your hands. Often people are believing, when they're trading that you need to be in a trade all the time. Well, you don't. We're led to believe as humans, the more work you put in, the more money you should get paid. Well, actually, it's really the less trades sometimes makes the more money by taking the high probability ones. So I don't normally do that on a Sunday ahead of the trading week. Then when you go back to the candlestick charts, it removes those basically the noise of the wicks, and it just shows you the close. Remember, this is on the daily chart. So do that across your currency pairs on a Sunday night. Do it on a Sunday night. Otherwise, if you're doing it before, as you're about to make the trade, emotions come into it. Is that a level? Isn't a level? If you do it beforehand, you're confident in the cold light of day when nothing was going on, no distractions. Those are the levels you're not trading through. It stops all those little emotions coming in. Let's go back to the chart there and see what we were thrown up with. We had a 15-minute dollar against the Swiss. Let's have a look there. What's that showing? Again, it's not a great trending market. The 15-minute. Let's have a look at the higher time frame. Okay, so I mean that the 1 hour is, you mostly see the moving averages bunched up here. It's really, I want to be trading this type of stuff, when it's really trending. So I'm not going to take that trade on this stream for the sake of it, because that would just basically maybe lead you into a trade just for the sake of it. And I'm a big fan of not trading just for the sake of it. Only the high probability trade setups for me. Believe me, trading this strategy on the 15-minute chart, or 1 hour chart, there will be plenty of opportunities throughout the trading week. Don't take them just because you want that compulsion to be in a trade. That's, again, not a setup you want to be taking. Unfortunately, I can't see any questions. I don't know if there's any. I don't know if my production manager can see any questions, wants to pop out questions for me. I can maybe address them if he's monitoring that. And that'd be good. Right, let's have a look here. We've got a Euro New Zealand 5-minute pin. Nope, nothing there. Well, questions about the DAX. Okay, we'll have a look at the DAX. Stock markets are plunging last week on China news and so forth. We'll have a look at the DAX at the moment. Can you look at the indices, DAX US and the NASDAQ? Certainly, we'll have a quick look at those for you, for those. So we'll pull out that now. So I just go to these indices. Okay, the DAX. Let's have a look at the DAX. There we go. I'm just going to drag that out to the lower time frame charts. Always like to use multi-time frame analysis. The daily. Then you've got the 4 hour. Okay, so for me, the DAX is clearly under pressure. Okay, I would say this little pullback we've got at the moment has real hard work to get through these levels. Okay, so as I said before, the pullbacks, we don't know if it's a pullback or a reversal. This is having a minor pullback, but we are coming into what I would consider to be a level of resistance around that level there. So, oops, daisy. So around this zone. So my trend bias would be a continuation of this. Lower highs as we continue this down. We've broken through this sort of, looking left, a bit of a consolidation level. We've broken through there, back up to retest it. My strong bias for this at the moment would be for this week, or for the next few hours, would be for this level to hold around the 350 level. I wouldn't be going long until we get up past that level, and in then I would say looking at resistance up there at 1500. So bias to the downside with a target level of 13375 would be my bias, with stops below above this swing height. That would certainly be the bias for the DAX for me. But again, that's not, you can't trade that. You need to have your own strategy in play. People speak to me all the time. What do I think of this going up, going down? I don't have the authority on on direction of the markets. If I did, I would be a billionaire. I just trade my strategy. I trade my strategy without fail. If the stars align, I'm taking my trade. I don't know if it's going to be a profitable trade. I know with my own trading over the last 35 years or so, I have more profitable trades than I do winning trades. But when I place any trade, I do not know whether that's going to be in what category. I do not know. What else? We want to look at the 30. Okay, so this is the Dow, same type of thing. Okay, this is the Dow daily broke. We had this pullback. I was sitting there last week because I'm pretty long the US stock markets in other entities in terms of bonds and so in terms of funds and so forth. But looking here at and I was looking at this rally. I think maybe a rally is on, but where did the rally stall? It stalled right at this double bottom. Old support acting as resistance. Remember, old support acting as resistance. We've broken through the lows as well from Friday's lows of 31.24. Again, for me, and I hate to say it because obviously I'm pretty long the US stock market in some of my funds, but I would be saying now that this level on the way up at 32 400, 500 level will act as resistance. So for me, I'd only be selling into this if I'm intraday trading, which I do not trade intraday, the Dow, by the way. But if I were, I would be looking to sell into any pullbacks whilst we're below this level here at 32,500. 500. That would be my bias. But again, you need to follow your own analysis. Okay, let's just have a look here at the lower time frame charts today. This is the 1 hour. Again, we've had the pullback. It's stalling at this previous low. Same thing. You saw it there on the higher time frame charts. So for me, while we're below this level, it would be a sell. DAX and the US 30 and the Nasdaq. Nasdaq's going to be the same picture. Okay, so this is the Nas, and it's pretty much the same picture. Bias lower, with resistance up there at 12,130, and the lower time frame charts would, it's looking all pretty sad, isn't it? In the tech stocks, you've broken through that level of previous support. This pullback last week, you had this bearish engulfer. Remember the little pattern I'm talking about? Is it a pullback or is it a reversal? Well, that pattern there tells me that this indeed was just a pullback, and now continuation in play. So trades lower. Could someone say something about your results with continuation strategy, win rate, profit factor, such as profit factor? I like to trade the profit factor of anything between 1.4 and anything above 1.4 is good. But again, it does depend on your time frames and so forth. In my historical data, anything above 50% is good because I take more gains on my winning trades. So I would say if you're trading with strong trend, your profit factor should be above 1.4, possibly up to 2.5. And if you're trading strong trends, you should look for a win-loss ratio 55, 60%. If you're picking the right trending markets and you're not using the risk, not taking the risks through the daily support and resistance levels. It's a strategy I've basically been trading since 2006. So there you go on that one. But again, it depends. And also, I mean, I got no problems telling you. Before I came into the education space at Forex Signals 6 years ago, I was just trading. That's all I did, sitting here with all my screens. I now trade a lot less than I used to, purely because of my other commitments. But again, I'm not a charity. I don't do this for charity. I do this clearly because it's another payment. I get paid for educating as well. So I'm not as active on the lower time frame charts as I used to be. But I've got no qualms about telling anyone that at all. But again, I have been doing it for 35 years and education as well for the last 6 years, I guess. That's about it. But good question. So thanks for that. But what I would say, and the other thing I will say about that, because people say about the strategy is what's the win rate, loss rate, and I can give the numbers. I can show you data for that reversal strategy. The big reversal. We did back testing over 16 years worth of data with a 79% win rate. But at the end of the day, you will never trust me. You don't know me. Why would you trust anyone with your hard-earned family money? Well, you should never trust anyone. You should only be trusting yourself. So whatever strategy you employ, don't ever trust the person that's telling you need to go and get your own data, because your own data is what you can compare it with, not someone else's data, because this is not a mechanical system. This is a discretionary systems that I trade. Discretionary systems with trading rules. If it were, I can just plug it and play it and go away and sit back on my villa beach in Thailand. But you need to not trust educators' strategy that that's going to be your bread and butter for the rest of your life. You've got to put your own work in, unfortunately, and do your back testing. I've given you a bit of an insight into two ways that I've traded: counter trend and with trend. You remember having a simple set of trading rules, knowing what your win rates and loss rates should be with your back testing. For me, it works. You've got to have a rule-based trading strategy. And personally, for me, I don't need to use all those indicators, oscillators that basically help me predict the future, because ultimately the future is pretty much unpredictable. You need to just follow a simple trading strategy that works for you. You can give a coin to 100 people. Buy if it says heads and sell if it says tails, and you'll still have people blowing up their trading accounts on that. Because it's not always about the strategy, it's more about the person. But you need to have a strategy, of course. Right, folks, I will leave that there now. Actually, before we do, just have a quick look at the economic calendar for the week ahead. Okay, so quite light on the economic calendar this week. we've got Bank of England Bailey speaking this afternoon. That should be quite interesting because obviously we've had some rate hikes in the UK, and we want to get a feel now. Is it are they going to wait to see how the market plays out? If you look at the data that's been coming out of the UK recently, it's been quite subdued. So you may get the feel from the Bank of England governor later that they're going to wait to see. Are they going to wait to see before they start moving rates up any further? Instead, that inflation came in at 9%. Would you believe? The Bank of England has got to control inflation out of 2%. It's a global phenomenon at the moment. You've got PMI data out tomorrow. PMI is a good bit of data. Do keep an eye on that one if you're looking at potential euro strength into the next ECB meeting. Central bankers love a PMI data. It's Purchasing Managers Index. It's a forward-looking data. It's a survey basically looking at talking to all the manufacturing business owners and leaders. Are they investing in plant? Are they investing in staff and so forth? Anything above 50 is deemed to be an economy that's expanding. Anything below is contracting. So we'll keep an eye on that one. Central bankers like to look at that one as well. New Zealand, big event this week. We've got the RBNZ monetary policy meeting looking for a rate rise of 0.5% again. They were one of the first ones to move their interest rates, but it's pretty much priced into the market, which is why the New Zealand dollar isn't really soaring ahead at the moment. FOMC minutes, that's basically the Fed's policy meeting and the minutes of that. So we'll get a feeling for that. I do feel that these minutes sometimes are becoming less important now that the fact that the policy members are on the newswires all the time discussing their forward guidance, if you like. But there you go, the markets will react on it. So the dollar's been trading lower into all last week, as you know, dropped 2% last week, the dollar. So maybe we'll see how that can maybe continue the dollar weakness or maybe stall it if they are more aggressive in their thinking about rate hikes. And you've got GDP and core PCE in the US as well. If you want to know what any of this data is, this is on Forex Factory. It's free. We've got our own one at Forex Signals, but you can use this one. It's absolutely free. If you want to know what any of these data releases mean, you can literally just go to this little box here, and it'll tell you exactly what the indicator is and how it's likely to affect the markets. So it's a really cool piece of free content, Forex Factory. I think most Forex traders use it, to be honest, although hopefully quite a few use ours. There you go. Right, my little ticket is pinging away there, saying that we've got some more trade set up, so I'll see what's about there. Thanks for joining us over the last month, for the month of May. Hopefully you've got a bit of an insight into the way I trade the markets and the way we trade the markets. There's plenty of ways to skin a cat. I like to keep things very, very simple with trend following or counter trend trading. Only the most high probability trade setups. It's not about one trade, it's about the big picture. I'm able to take losses because I'm risking a small amount per trade. But of course, my target is reasonably small per month as well. 4%, 5% a month. You might think it's small. It is small, but it's well attainable. You can trade 4% profits in a month. Well, you can make a ton of money. Certainly if you ever consider trading prop firm money as well. More about that another time. Thanks for tuning in. I will see those that want to follow on Wednesday for the last event from my good self. If that's not your thing, that's not a problem. Thanks for joining here on the channel. And I'll see you another time. Thanks for tuning in.